Let's turn to page 126. 126 contains the general journal for January. And you'll notice that entry A is to record a sale of the truck. Are we going to have that same entry in February? No, we're probably not going to sell the truck in February. We won't. Entry B is to set up interest due on an open line of credit for Riverbank. That could be an excellent standard entry. But it's possible that when we set up the standard entries journal, or right now, we plan on paying that off right away. And so rather than set it up in the standard entries journal, we're just going to carry a general journal entry for it. Okay? So that entry will carry over into February. Let's go ahead and turn to page 128. And in the description, entry A, copy the title to set up interest due on open line 1% per month Riverbank. Just copy that same entry from the general journal in January to the general journal in February. Same amounts too. Debit to interest expense, credit to accounts payable. $72.30. Okay, let's go back to page number 126 one more time then and look at entry C. Purchased the used vehicle. That's that truck we bought from Valley Motors, a 1989 truck. Are we going to have that entry in February again? No. Only if we're to buy a second truck, and we didn't. Okay? So you can just assume no entry to entry C. Okay? Okay. Let's turn the page again then to page number 128. You've got the general journal. The only entry to the general journal will be the one you've just prepared. Page number 129 is the statistical information sheet for February. Now this is primarily used for the upper half of this page, is to do the bank statement reconciliation. There's a place to record the outstanding checks and outstanding deposits that might occur, and also then underneath that the bank statement calculations. Normally, this information will be on the back of a bank statement. Most banks actually produce it and print it right on the back side of the statement. You can prepare this right there if you prefer. Okay? Then we have a place to record the fixed assets purchased, if any, during the month of February. Fixed assets disposed of, there were none. That's something that oftentimes you wouldn't know unless you asked if there were any disposed of, because oftentimes they're just thrown away. And certainly there's no accounting record of that. And then finally, the last box is the inventory cost calculations for February. And we went through that process with January. Turn the page. Page number 130 begins the general ledger for Alfredo's Deli. And you'll notice that January is all posted and a new balance is arrived at for each of the accounts. How much do we have in the bank account at the end of January? $26.53.57. So how much do we have in the bank to begin with on February 1st? $26.53.57. So that's our balance. Each of those are our balance coming into the new month. Now I will tell you that in dealing with the balance sheet accounts, which are the assets, liabilities, accruals, and capital accounts, you can ignore the column that says month to date. Do you see that? But beginning with the sales, the cost of goods sold, and the expense categories, those columns will be important. So let's turn in the general ledger to where they begin on page number 135. Page number 135, upper left-hand corner, shows wholesale sales. Now for January, of course, the amount for the month of $9,566.30 from the cash receipts and sales journal carries over to the year-to-date balance. In February, we're going to post the sales for the month of February. It's going to be a different number, obviously. It's going to be a credit. In that particular month and in all subsequent months, you're going to want to also show the total for the month in the month-to-date column. Add that to the previous year-to-date to arrive at the year-to-date sales. Now you'll see why we go through that exercise in just a moment. But you might recall from a few sessions ago we talked about auditing. Do you recall doing that? And one of the things we do is we create a monthly comparative income statement. And each account in the sales, costs, and expenses, we're going to compare the current month to the previous months, right? And that you can do directly off of the general ledger if you have the month columns shown, the monthly sales shown in that column. Do you follow that? Now, you might have, on occasion, the same journal entering debits or different journals entering debits and credits into the same account. So you might have to summarize or total two journals for that month to arrive at that month-to-date column, and then, of course, add that to the year-to-date. And you'll see that as we go through this exercise. Let's turn to the financial statements that are found on page numbers 141, or 140 and 141. These are the balance sheet and the income statement for Alfredo's Deli for the month of January, and they're already provided. You'll notice that in the income statement on page 141, there are 4 columns. The first 2 say month to date, and has a debit and credit column, and then the far right ones say year to date. Now, January is the same both month to date and year to date. So it would be redundant to have the same information in both columns, right? Both sets of columns. Same as year to date, right. But if you look at, turn page 142 and 143, now we have our financial statements, our balance sheet and income statement for February. But here, the income statement will be different for month to date, because month to date will only have the sales, costs, and expenses for February, and year to date will be the total of January and February's sales, costs, and expenses. Okay? So having gone through that in the general ledger, you will already have the numbers, and it's just a matter of transferring them into the income statement. Turn the page. We'll wrap this up. Page 144 is the payroll subsidiary ledger for Alfredo's Deli and for our employees, our 4 employees. On page number 145 is our accounts receivable subsidiary ledger that goes 2 pages long. And on page 147 and 148 are the accounts payable subsidiary ledgers. Okay? That's the exercise. The beauty is you've got January to look at if there are any questions. You know, your goal here is hopefully to complete this exercise without having to go back to the answer sheet, okay? And follow the template that was provided in January and utilize that in coming up with the results that you want to have in February, okay?
Now complete the books for Alfredo's Deli. First, using the given information, make all journal entries. Then, post the column totals from the journals to the proper general ledger accounts. Then complete all reconciliations and financial statements. Finally, post to the subsidiary ledgers. This concludes Session 1, Alfredo's Deli.